Okay, so picking up here with part 3, the Single Audit Act. And so again, this is kind of an addition to the other requirements related to auditing, governmental auditing. And so when does this kick in, right? Well, essentially, if you have state governments, local governments like cities or townships, and nonprofits that have expend more than $750,000 in federal financial assistance, then all of a sudden now they have to adhere to the requirements of the Single Audit Act. Okay, and so these are more extensive than what you would get under the governmental auditing standards. And so obviously the university gets more than $750,000 in federal financial assistance, and so we would have to adhere, for example, to the Single Audit Act. Okay, and so again, we have to do a financial statement report with GAAP, and then what's new though is we now have a schedule of expenditures of these federal awards, and make sure that those are all fairly presented. And so that's an additional requirement. Then there's going to be certain provisions, so make sure, for example, if there are requirements around tuition assistance, right? There might be requirements around the demographics of the individuals, and so that get the assistance, and so it could be that's one thing that needs to be tested. But that's an example of what we need to make sure the entity complied with those provisions, especially the ones that have a direct and material effect on each program, right? So there's still materiality is considered in these audits, but now the subject matter is just different than financial statements alone. Now we're getting into this federal financial assistance program. So how do they determine which assistance programs to test? And they are going to look for compliance and also look for controls over the program. And they're going to look at they're going to use a risk-based approach, just like all auditing does, right? So it could be the amount that they're going to look at. What's the risk if there's non-compliance? Or what's the risk of material non-compliance? Like some programs may be easier to administer than others, right? And so ultimately, auditors, according to the Single Audit Act, have to test programs that equal 40%, at least 40% of total expenditures, federal expenditures in terms of the assistance programs, right? So now in the Act, it talks about it guides the auditors in terms of how much they have to test, whereas the other audits, it's left more up to the discretion of the auditor. Okay, just like before, we're concerned with compliance around direct and material effects, but now it's on the major federal assistance programs, right? Whereas before, under GAS, it was direct and material effect on the financial statements. Now it's on each major assistance program. So the materiality isn't for the firm as a whole. The materiality is determined based on each program. So each program might have a different level of materiality based on how large it is, right? So just like before, assessing inherent risk and control risk, and then designing substantive procedures, right? In this case, they have kind of more specific guidance. OMB is the Office of Management and Budget. That's a federal department, and they're just basically specifying suggested audit procedures in order to get at how to manage detection risk, essentially, right? And, here's some of the specific requirements. I'm not going to go through this level of detail here for the Single Audit Act and this OMB circular, but these are some of the things in terms of what they need to do in order related to the Single Audit Act. Okay, and then how to evaluate results, frequency, magnitude. What's the dollar sign right there? Right, so how often is it occurring? What's the magnitude of it occurring? If you're doing sampling, then you have to project that amount just like you would do in regular audits. But now the one difference here is they do define kind of a minimum materiality of this $25,000. Any costs that are above that have to be reported, whereas obviously with a regular audit, there's no requirement that has a specific dollar amount. And so when you're reporting, again, you have to do that schedule of expenditures, and then basically give an opinion whether that's fairly presented, and whether you also have to report on, as an auditor, whether the entity complied with those provisions of the laws, regulations, and contracts, again, that have a direct and material effect, and again, specifically on each major program, right? And then making sure that they're doing looking at internal controls over these programs, just like normally we do an internal control, evaluate internal controls over financial reporting. Now we just have to do an additional, as auditors, additional report on internal controls over these programs. Okay, and then just lastly, I just wanted to wrap this all up, just to remind, I think I did this very early on in the class, and this is the components of a general assurance process, right? And all of these that we've talked about, whether it's financial statements, operational audits, compliance audits, all of these fit into this framework, right? Where we have this three-party relationship. We have an assurance professional, an auditor, whether it's an external auditor, an internal auditor. We have an accountable party like managers. We have users, whether those are shareholders or regulators, the government. There's this three-party relationship, right? Where we're determining the scope, right? What are we doing? The subject matter, the criteria against which we're going to assess it. There's an execution piece and a conclusion piece that usually includes some communication. So just think what we did today. We have an operational audit. Well, that's using an internal auditor, right, that does that. Internal auditor, like a CIA, a certified internal auditor. Managers are the accountable party, and usually be manager over an operating unit. Scope would be the operational unit. The subject matter, and that would be the objectives and the standards. Oop, can't write that very well. The firm objectives related to the operations. Right, so operational objectives. Okay, the criteria in that case, it kind of depends on what the unit is, right? So probably the subject matter would be the operational unit, and the criteria would be whatever the objectives are of the firm, right? Maybe they have certain goals related to amount of waste or how efficient the operations are. Maybe they're industry goals, right? Those are the criteria. Then obviously the execution and conclusion would occur, but there the user would be managers, right? And the board. Okay. And so it fits that general process. When we're talking about compliance, then we might have a CPA come in and do an audit, right? The accountable party, again, would be managers. MGR is what I'm writing there for manager. The subject matter would be the compliance with the laws and regulations. Or excuse me, subject matter is the compliance with the laws and regulations, right? The criteria, it could be the generally accepted governmental auditing standards, right? It could be the Single Audit Act. Let's write Single Act there for short, right? And so whatever, again, it kind of depends on do they meet which condition they meet as to which criteria they use. again, execute it, conclude it, communicate. The users here could be some governmental entity, right? If it's like environmental, then it could be the EPA, right? If it's a federal education, for example, assistance, then it could be the Department of Education. Whatever the user is, that information and report would be communicated in. But again, that process of doing a compliance audit still fits this general flow, right? This general process of performing an audit. And so, again, I hope that through all of these topics, you're kind of building kind of this common, consistent, framework for how we go about doing audits. Because once you understand how to audit, you can apply it to a lot of different areas and a lot of different subject matters. All right, so that's it for this topic.